Four people texted me to say that he's training physical. This boy now, he came from training. Where am I sorry, buddy?
Right. Now it is hello, everybody. If you are live, you just say, just type I'm here. I want to see you typing you are here if you're actually here. All right, I can see Matthew, I can see Nathaniel. I can see Aaron Sunday, I can see Igwe, Tara. Right, I want to welcome all of you. I'm going to be with you for the next 30 to 40 minutes here. And this class, I have a passion for this class. Okay. To just share what I know. Okay. If my strategy will profit you and make you a better trader. And I'm also happy that virtually everybody here has laid his end on trading forex markets one time or the other before. But sometimes we may have to, as good as that is, it's also a challenge. A challenge in the sense that, sometimes when somebody has formed an habit and then you are meeting a different person like me, and I want to teach you my own strategies, for you to unlearn what you have learned is a little bit tough. Honestly speaking, it's very, very tough. For example, there are people who trade many years back, or let's say a couple of years back. I was fond of trading so many instruments. At a particular time, I was trading 14 instruments every day. I keep my eyes on a lot of instruments. It took a lot of time, discipline, energy for me to cut down, say no, to cut down to 1 or 2, 3 instruments. So sometimes it's very difficult for us to unlearn, we learn. So, and that's one of the things that give me passion for this class, to actually mentor based on experience. Okay, based on experience. I believe that what I know will help you. I'm not saying I'm the best out there. I'm not even the best. Many of you don't even know me on social media, so that's not the interest of this class. Okay, and you see, what is one thing to teach, another thing for you to learn. Okay, and sometimes when it comes to something like this, don't get only carried away by the folks that are online. If you are here, I still want to see you say, I'm here while I'm still speaking. Okay. And I believe you are hearing me also. Now, so sometimes you come online, you see a lot of lifestyle traders, which is quite interesting. But you see, I've been following a lifestyle trader, following somebody lifestyle online does not really translate you into you being profitable. It doesn't. I'm telling you. And then learning from somebody who doesn't have a lifestyle, so to speak. See, there's a lot to do with how you translate what you learn, into your practice, into, okay, let me give you 2 examples. The person that taught me this foundation of how to trade, okay, sometimes he sees me today and feels like, boy, I'm doing better than him. And there are students I've taught Okay. For example, I have some students, I have like few students in year 2020, 2021 who made massive more money than I ever did. Okay. So, just like you have a lecturer in university that taught you engineering, and then the knowledge he gives to you, what you do with it is very, very important. Very, very important. So, the purpose of this class is to actually let's educate, let's learn, and let's learn rules and principles and how I trade actually. How I trade. I'm going to begin with how I trade personally, and I've been very profitable. Trading is a lot psychological. It's a lot and a lot psychological. A lot and a lot psychological. Okay. I placed it. The last two trades I've placed yesterday and today. The exact place where I came out of the market was where the market turned around. Yesterday, as I told people to close the trade, that was where the market turned around. And where I today too, where I closed the trade is where the market turned around. Now that's how I got to know that now. It's something that take me more than 5 years to figure out. I'm telling you, more than 5 years to figure out. More than 5 years to figure out. And if you don't know that, you will make profit and you will lose it back to the market. Especially when you assume to be a day trader. And so don't forget I told you I'm working with a syllabus, so I'm going to begin from systematically. Today I'll just take you through from page 57 to page 53 of my slide. If you're able to complete it, 57 to page 63 of my slide. I believe a lot of people who have been in our class before must have you have taught to the basic class, so the beginning pages are strictly based on basic standard course. Okay, so if you learn anything new today, fine. If you don't tomorrow, I believe you learn something new. Sometimes when you come to, if you have been trading before and then you are in this class, sometimes it may be one sentence you will learn that will transform your life, that will change your life forever. Let me tell you something. Many years ago, I traveled to another state. A particular broker was organizing a forex class, and then forex training. It was a day. So I went there, traveled, went there, and then I was just at the back. I was listening to this guy. This guy's big trader. It was a broker that brought him to come and train. Now there is nothing the guy was teaching that I did not know. So at the end of the class, they said they are selling a CD for training. CD for training. At that time, the CD was one CD like that. This was about 50,000 or so. Just one CD, 50K. One CD, 50K. So I went there. Funny enough, I was the only person that bought the CD. I was the only person that was looking for that guy. I said, at the end of that class, I said, I want to buy that CD. I was the only they themselves were looking for where they kept that CD. They brought some copies from where they came from to that state. So I bought one CD from them. After going to CD, I came home, I played it. There was nothing in that CD that I did not know. But there's one sentence that the guy made when he was teaching fundamental analysis, only on fundamental analysis. There was one sentence that the guy made that changed my life forever. That changed my life forever. So something happened one day. I was in my office, so I traded. I traded gold. It was in news. I lost money. So because I lost money, I left my system. I said, okay. It was about the third day I bought that CD. I said, okay, let me spend my time watching this CD. So I was watching the CD. Everything I was teaching, there was nothing new. But now he said, let's start teach fundamental. The guy came in, I was teaching fundamental, and then here comes a statement that changed my life. So the guy put up a statement, and a boy. So the next news, the following day news, using what I learned, just one sentence I learned in that place, I made profit. I made times 3 of the money I used to buy, of the money I lost, the previous day, based on the news. I made times 3 of the money I lost the previous day because of that sentence. So when you come to a class like this, I want you to pay attention. And see, when I'm teaching on that, when it comes to money, I don't play with instruction. Please don't play with instruction. For example, now, if you're a day trader, there's a particular time of the day you must, if you're in Nigeria, that your system must open. your system must open. At a particular date, there's a particular time of the day that you must close your system. Just walk away from it. There is no signal you want to enter that time on a particular set of currencies. You understand? Just close, just walk away, except you're a trend trader. Okay. So, and then most of what I'll be sharing with you, especially when we get to later end of the syllabus, will be tailoring towards a day trader, a day trader, a day trader. Because see, what happened is that before I used to be a trend trader, and then it took me more than 8 months to reconfigure my head to switch day trading. It took me like honestly 8 months. 8 months of back-to-back testing. Then I would no signal to any changing person because I need to reconfigure my head to switch day trading. And to configure my head because the style of a day trader is different from the style of a trend trader. The style of a scalper, I don't do so much scalping, you see, but but to change my mind, to configure my head, configure my understanding to day trading, it took me more than 8 months. 8 months of being alone, 8 months of reconfiguring myself. See, one thing about trading is that, see, it's not, it's not like what you learn and then you prepare an exam and at the end of the exam you forget what you learn. You must build such a system. You must build such a structure that if somebody open the computer, your screen, and I give you charts, and in the next 45 seconds, you should know whether you should be buying or selling. The only thing that may remain is where I'm going to be joining the buy, where I'm going to be joining the sell. Okay, so that's very, very important. So I'm going to begin by taking you to the first page of my slide. If you are not hearing me, just let me know. Are you all hearing me? Are you hearing me? If you are hearing me, say I'm hearing you. Say I can hear you. Okay, someone say I can hear you loud and clear. Thank you. I can hear you loud and clear. All right. So let me take you to let me share my screen with you. This is not showing my PowerPoint screen. Can you see my PowerPoint screen? Wait. I see my PowerPoint screen. Okay, yes. All right. I like this place. I like this particular slide I put up because it will change your life. Okay. Now, historical pattern. Going back to the 19th century, the father of technical analysis, Charles Doe, observed that it is the direction of peaks and trough that defines the trend of the market. The direction of peaks and trough that defines the trend of the market. I mean, the direction of the highs and lows is what reveals the future movement of price. This is a very, very simple sentence. But you see, many times we disobey it. Okay? Many times we disobey it. It's as simple because sometimes when you see it tells us that when we're having the highs, when the market is forming higher highs and higher lows, you are supposed to be looking to buy. You're supposed to be looking to buy. But some people still look to sell in such a trade and then they still lose money. They lose money. Why? So the direction of the market, the direction of the peaks and troughs is what defines the trend of the market. That means when we are having higher highs and higher lows, the market is said to be in an uptrend. When we are having lower highs and lower lows, the market is said to be in a downtrend. Okay? Just a minute.
Is there a way I can share my screen to show this?
Ah, okay. And so let me take you to the next slide. And who is this guy? Who is this guy? Now, the founder of USA 30 or US 30. See, if there's any instrument that respects price action, US 30. In fact, the name of US 30 is called DJIA, Industrial Average. Is the founder of US 30. US 30 actually means the top 30 companies in America creating a stock, even though it's an index, it's indices. So that's US 30. So it tells you that, look, when you it is the direction of peaks and troughs that defines the trend of the market. So when you come to the market, that's the first thing you look for. I remember many years ago, I pasted it. There are about 10 laws. In about 2019, 2020, about 10 laws I paste everywhere in my rooms just to remind me. Because sometimes it is easy to know this thing in the head. It's very difficult to keep the rules. Very, very difficult to keep the rules. So my rule number one is that every time I open my system looking for signal, the first question I ask myself is, what in the world is the market doing? What in the world is the market doing? Where is the direction of this market? Before I want to sit down, before I want to say, okay, I want to buy, I want to sell, the first question I ask myself is, where in the world is the market going? What in the world is the market doing? Is it buying, is it selling, or is it ranging? So what I do is, I ask that question, I will now write question two. I will now name the trend, uptrend, downtrend, ranging market. Then the next question will now be, how do I enter? If it's buying, how do I enter to buy, or how do I enter to sell? Okay, as simple as that is. Now you discover the moment people forget this thing, and that's why they lose money. You forget it. It's as simple as that. Never trade against the trend. They say trend is your friend. The first thing you look for, what is the market doing? Now you see, if you see a sell signal in an uptrend, don't take it. No matter how nice it is, don't take it. Now listen, if you sell in an uptrend market and you make money, not because you are trying to trade a pullback, if you sell in an uptrend market and you make money, you will lose that money back. I promise you, you will lose the money back. You understand? So it's very important that you understand that. So now the key ideas of Dow Jones theory: market moves in trends. Market moves in trends. Trends have three phases: accumulation, public participation, distribution. Number three, indices must confirm each other. Number four, volume confirms trend. Number five, trend persists on the clear signal of reversal. So there are three of them I want you to take note for now. We'll be talking about this number two and number three later in the future. But I want you to look at number one: market moves in trends. Volume confirms trend. Sometimes you got the trend, but then the volume has reduced. For example, you want to trade GBP USD, or you want to trade GBP USD, and you are seeing a signal around 4 p.m., 5 p.m. here in Nigerian time. Don't bother yourself, except you are a trend trader. Don't bother yourself as a day trader. The banks don't close in America. You understand? Don't bother yourself. So you may have signal then, but you lack volume. Volume confirms trend. And then this number five. So I want to pay attention to number one, number four, number five. Trend persists, but a clear signal of reversal. Then let me take you to my third slide before we go to, or before then, let me show you something here. Are you seeing this? Are you seeing my notes? Oh, you're not seeing my notes. Okay, let me okay, let me continue from it. Let me just continue. Okay, so you see, the market is forming series of higher highs, higher highs, and higher lows, higher highs and higher lows. The discipline is that I will never look for a sell in this market. I'll be looking for a buy. Never try to sell in an uptrend. Never try to sell in an uptrend. But see, there's something about this particular slide. He said, this is number 5. Trend persists until clear reversal signal. Trend persists until there's a clear signal that there's a reversal on the trend. And this reversal on the trend, you can't know it on a lower time frame. It has to be on the higher time frame. It has to be. So let me say, if your entry is on 15 minutes, okay, you can only check your trend on 1 hour. If your entry is on 1 hour, you need to use 4 hours or daily time frame to determine whether the reversal has started or not. You cannot use the same time frame you are using to enter trade to determine whether the trend has changed or not. It is not possible. You can't do it. Okay, so let's do something. Let me share a note with you. Okay, is everybody see my screen like that? Should we see my note? Should we to see my notes? Is anybody see my notes? Are you seeing what I'm doing? Wow. Are you seeing what I'm doing on the board? Or is blank? You must see my screen. You must see. You must see. Can you imagine? We're supposed to show the movement. I'm trying to draw it here. I wanted to see the movement of this thing. Okay, all right. I think you are seeing, but just that it's slow. It's loading very slowly. So now this is an uptrend market. Supposed to be hearing myself. Just a moment. Sorry, I love to be hearing your feedback. I love to be hearing people's voice, but maybe because we are using this um, we're using YouTube Live. Okay, so now if I have an uptrend market like this, okay, the market is buying. The market is buying. Now, as long as by the time I see, okay, let's say this market was on a downfall before, okay, it was selling, everywhere here. I'll be looking for opportunity to sell. There's so many ways. The next class is I'm going to be teaching you how to trade a trending market. But the first thing I'm going to share with you today is that we're sharing now is how do you identify trend, and you must stay with trading the trend. So if you have something like this, now let's say by the time you come to the market, the is selling from here. As long as it's breaking this lower low, is breaking the lower low, is a sell. Even when the market comes to this place, it is still a sell. The time you start thinking to buy is when this resistance is broken. It's broke to this side. Okay. Now, this theory tells us something. The theory tells us that the direction of peaks and troughs that determines the direction of the peaks and troughs that signifies the direction of the market. So when I'm having the higher high and higher low, then the market is buying. When I'm having lower highs and lower lows, then the market is selling. If I have, lower highs and lower lows, the market is selling. As long as it's breaking this low, as long as it's still breaking this low and it's breaking this low, I will never look for the opportunity to buy, even though some people may do it, but that's not advisable for a beginner. For a beginner, it is not advisable. So I'll be looking for opportunity to sell. So I have like 5 rules, 5 principles on how to sell a trending market. You can use trend line, you can use Fibonacci, you can use ADX, you can use moving averages, you can use a lot of other things. Then you can use support and resistance, you can use all of those things to know where to enter the market. So I'm going to be looking for a sell on this market. But the moment I see something like this, it has broken the market structure. But yeah, that doesn't mean I will buy, because it is possible to have that and to have this again. The moment you have this, it means there's something wrong somewhere. A news has happened. Something is wrong somewhere. Those are the exceptional cases. In fact, if you lose money from here, these are the times when your strategy has some exceptions. When the thing has broken resistance and you feel like, oh, I want to, because something happened like that recently on GBUSD, I think, and then the resistance was broken. Then this has to be on higher time frame, like daily time frame. You'll be looking at the chart on daily time frame. You got to see it is the higher time frame that determines the trend of the market. So let me take you back to my slide, to my Windows. Now this is I understand that what we are sharing now, what I'm sharing with you now, all of you know it before. I understand that you know what I'm sharing with you before. But it's not about knowing before, it's about sticking to it. Sticking to the rules. Sticking to the rules of following trend. Trend is your friend. It can be disciplined not to follow trend. You will make money. You will make money. There's no doubt about it. You will make money. Trend is your friend. So when I'm seeing an uptrend, I'll be looking for the opportunity to buy. And when I see a downtrend, I'll be looking for opportunities to sell. You have an higher high and higher low in the market and uptrend. Now, but there's something I want you to understand. That's where I usually end our basic class. That when the market make two successful peaks and trough higher than each other, the market is said to be in an uptrend. Let me look at that. Let me look at that. Let me look at that slide. That slide I used to use. I'm coming, please give me a moment. Now, please look at this. Very, very important. Please, if you need to write this one down, please write it down. We're still talking about the Charles Doan and theory. Is that when the market experiences two peaks and troughs successfully higher than each other, then the market is said to be in an uptrend. When the market experiences two peaks and two troughs successfully higher than each other, then the market is said to be in an uptrend. Are you seeing my slide? Can you see my slide? Voice clear here. It's the YouTube that is causing it though, because I'm seeing is delaying. Let me reshare again. Window. After I've closed it. Now you see, when in market, don't forget this rule, please. I beg you in the name of God, don't forget these rules. When the market experiences two peaks and troughs successfully higher than each other, then the market is said to be in an uptrend. Therefore, if you have been selling before, stop selling, begin to buy. So if you have attended my physical class before, you will hear me saying P1, P2, T1, T2. That's in two peaks. If I count P1, P2, and T1, T2, that means I will start looking for the opportunity to buy. That means the trend has changed. Trend has changed. When the market experiences two peaks, two troughs, successfully higher than each other, then the market is said to be in an uptrend, period. Because why is this very, very important? Why is this statement very, very important? Because people mix reversal, a pullback, they mix it with trend reversal. Trend reversal and pullback are not the same. Trend reversal and pullback are not the same. Trend reversal and pullback are not the same. Understanding reversal and retracement. A reversal is defined as a price turning point to the opposite direction of the previous trend. A trend is defined as a price pullback. In a trend, a retracement does not signify a change in the larger trend. Very, very important. Because people lose money when they are trying to trade a reversal. And they assume it is a retreat. When they are trying to trade a retracement, thinking it's a reversal. Market has not changed direction except you are able to count two successful peaks and two successful troughs. So if you on an uptrend, you must have seen two higher highs and higher lows. Then you begin to think of buying. If the market is buying before, and then you now see a sell, you now see two lower highs and lower lows, it means you start looking for opportunity to sell, and nothing should make you to buy. So you can see here, you can see a reversal is defined as a price turning point when price has changed into opposite direction. Price has definitely change to the opposite direction. But a retracement is defined as a price pullback in a trend. Can you differentiate between a pullback and a reversal? Can you differentiate between a retracement and a reversal? That skill is what makes you a champion in the market. The skill to be able to differentiate between when the direction has changed and when it is just making a pullback. That skill is what makes you to be a successful, profitable trader. A successful, profitable trader. As simple as that is, it is powerful. As simple as that is, it is powerful. It is powerful. You're not seeing my slide. I don't know why you're not seeing my slide. I'm sharing my slide. The screen is not supposed to be blank. Oh, I'm seeing my own screen here. I'm seeing myself. I don't know, and I'm sharing it. I'm sharing it. I'm sharing my screen. Oh God, screen now. Oh dear Jesus. My slide is very important. Too. Time for YouTube to load. Okay, okay. I said a reversal. Let's take it slowly. A reversal is defined as a price turning point to the opposite direction of the. A retracement is defined as a place as price pullback in the trend. I remember one particular day, I think like 2-3 weeks ago, I bought gold was selling. Gold was selling. I've been selling for previous weeks. So one day, I took a buy and I made profits. So the result was shared on the status. One guy private chatted and said, "Why are you buying gold?" I was like, my chart already showed me that gold has stopped selling. It is now buying. And I said, so I now messaged the guy. I said, reversal changed last week Friday. The news changed the direction of the market last week Friday, even though gold has been selling, but the last news of last week Friday changed the direction to a buy, and that's why I'm buying. The guy just said, "Oh, you understand?" So you must be able to know when is the pullback or when the reversal has changed. Very, very important. Please don't forget. Very, very important. To count 2 peaks and 2 troughs, and then in successfully higher than each other, uptrend has started. When you're able to count two lower highs and lower lows, successfully lower than each other, then trend has changed. You can even write this thing down and sink it into your subconsciousness. Sink it onto your subconsciousness. Now listen, please, I would like you to see, if you're trading on 1 hour time frame, you'll be looking at this on a 4-hour time frame. If you're trading on 15-minute time frame, you'll be looking at time frame. Very, very important. You cannot use the time frame market should be different from the time frame you're using to exit or your entry and exit, especially your entry. So if I want to enter my trade on 1 hour time frame, I'll be looking at this direction, these peaks and troughs on 4 hours. If I want to enter my trade on 4-hour time frame, I'll be looking at this trend, reversal and pullback on 4-hour time frame. Very, very important. Please don't mix it up. Don't mix it up. Very, very important. And someone that I want to trade on 5 minutes. You want to trade on 5 minutes. This rule will be applicable on 30 minutes. 5 minutes, 30 minutes. You want to enter trade on 15 minutes using these rules on 1 hour. You want to enter on 1 hour. This rule is applicable on 4 hours. You want to enter on 4 hours, then you have to go to one daily time frame to determine this because it has to be synced. When the market shows 2 peaks and troughs slightly lower than each other in a downtrend. In a downtrend. Of course, the opposite is true. I think it's showing on your screen. When the market shows 2 peaks and troughs slightly lower than each other, the market is said to be in a downtrend. That means once you're able to see 2 peaks and 2 troughs, that means the lower lows is the troughs. The lower high is the peak. When you see them slightly lower than each other, then a down trend has started. Then you start looking for the opportunity to sell. Opportunity to sell. Now let me take to my next slide. So now the work of Charles Doe and his partner Edward Jones said that trend remains in effect until a clear reversal occurs. Trend remain. If you see last week and this week is bringing confusion to those who are trading gold. People were saying overbought, 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 and so let's start selling. And I was saying that until I see trend reversal on my chart, I ain't going to sell anything. I'm not selling anything. I'm not selling it. Those are speculations. And because of that sentiment that was so strong, gold sold a little. That selling was based on sentiment. It was sentiment. Sentiment pull it down because people were saying, ah, this thing has been going high, 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 high. It will soon sell. It will soon sell. And then so it puts the market down because that will have an impact on the market also. It will have impact, but the impact will not be sustained for a very long time until you can see until the moment you're able to count two peaks, two troughs lower than each other, then you start looking for yourself. Don't mind whatever people say on speculations. Though I sold a little just once. I sold once because I saw these people are pulling the market down, but it's not really selling yet. You know, I remember that time I was in a gym and I was telling some of my students in the gym, I said, gold is overbought, gold is overbought. So I said, but me, I will continue to buy until I see a signal to sell. And that's what, because you have the rules. The chart will never lie. Your chart will not lie to you. Your chart will not lie. But the sentiment also is there actually. So if there is sentiment there, allow it to happen on your chart, then you not join it. You not join it. Okay. So it said trend remains in its effect. On clear, the word clear. In fact, let me tell you something about this word clear. You know, a couple of days back, or weeks back, I was rewriting my rules again. I have a note like that. I was writing my rules again, and I put it there. Clear. Sorry, I say clear signal. Don't assume. Oh, this can't do. I think. I say if it's not clear, don't enter it. So you have to be clear with what you are doing. Clear. For example, this morning, I took a trade on what was that? I think it was gold, and I wrote on the screen. If this candle close bullish, I will buy. If it candle closes bullish, I will buy. So what happened? The candle, if it was a 1 hour candle, 41 hour candle, it was a what is this pattern? No, it was railway track candle. Railway track, and don't worry, I will teach you 9 candles that you must always look for. 9 of them, 9 life-changing candles that you must never forget in your life. Okay, but it was this railway track candle. I said, if it does not close bullish, I will not enter out. By the time it was 5 minutes to the end of that candle, it gave me bullish. So I waited for another 2 minutes. 3 minutes before the end of that candle, I enter my trade. Boom. And then a little pullback, and I saw an opposing trend line up that gave me my take profits. I closed the trade, I was out of the market. And I'm like, okay, when we see again, we'll see again in the New York session. New York session, I was with the lawyer, and before I got back to the office, it's already like 1:30. I was like, boy, I missed the trade. But then there was no really signal for me in New York session, so I didn't miss anything. But I was one of my lawyers before the when the New York session was about to be. Okay, so trend remains in effect until clear reversal occurs. Trend exhaustion leads to trend reversal. Trend exhaustion. When trend is exhausted, there will be a reversal. You yourself, you will see it. Okay, so the chart. Let's see what actually happened in the real chart. That's where we'll be closing. That's where we'll be closing today. So next week now, I'm going to begin something like from here. Next, I'm going to be beginning from here. Did you see? You're not sure. Okay. This is where you're going to be how to trade trending markets, how to trade trending markets, how to use EMA, trend line breakout, Fibonacci, and then there are certain, in fact, there are personal rules. One of them I will be teaching you at the end of this training course, certain things personal that I've never heard anywhere else, anywhere, whether in any book or anywhere. They're very personal to me, and every time they occur, you know, when you stay close to the market, some things will jump out at you, and then you can customize them. You can put them. In fact, I'll be giving you some done theories. Okay, some done theories. So let me take you to the chart and let's see what happens on the um, where is this is not showing my okay. I mean, you can see my screen. Can you see my screen? Elvis, can you see my screen? Can you see the charts I've put up? Can you see my screen? I want to explain something to you. Are we together now? Are we together now? All right. All right. See my screen. Okay, so let me. So now I put up a chart here. Okay, this is GBP USD. You come to a chart like this, and you know, at any point in time you enter the market, come to the higher time frame. Okay. Now let's look at this particular part of the market. Let me use MetaTrader for now. Don't let me use TradingView for now. Okay, you see this place now. You see this place. The market is selling. The market is selling. All this while you are looking for opportunity to sell, 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 looking for opportunity to sell. The market is forming higher highs and higher lows. So let's say from here now, this is high and this is low, and this is low, and this is high, then this is low, this is low. Okay, then we have another high, then we have another low, then we have another high. I discovered that so we have the lower high, lower low, lower high, lower low. Though this may look like, in fact, I like this kind of signal. I have a strategy for this kind of signal. Okay, lower high, lower low, lower high, lower low. Now, as long as the lower high is not breaking the previous lower high, we are still selling. We are still selling. Don't try to buy. And so I have it. So the lower high is still lower than the previous lower high. The lower high is still lower than the previous lower high. The lower high is still lower than the previous lower high. You understand? Like that, like that, like that. Then, but all of a sudden, then we still have this. I still have this. I still have this. Then I have this. You know, this is supposed to be going down. All of a sudden, I have all of a sudden, I have this that's already broken the previous resistance. The moment I see this, the moment I see that this candle has closed above this candle has closed above this resistance, you know what I'm going to be doing? I'm going to be watching that every zeal to sell on this instrument has died inside of me. Every zeal to sell has died. So I will watch again. I will watch for the previous lower low. I will watch for this. If this comes down and break this, it means the sell still continues. Are you understanding what I'm saying? If you're understanding me, say, I can understand. Say, I understand. If you understand what I'm sharing with you, say, I understand. So I'm selling because see, my lower high is lower than the previous lower high. My lower high is lower than the previous lower high. My lower high is lower than the previous. So as long as it's getting lower, I will not try to buy at all. Nothing should make me to buy. Now, all of a sudden now, this one has broken this. And then I calm down. You know, there's a rule that says, don't try to catch a falling knife. I calm down. On a day like this, I will not trade though. Forget it. I will not even trade. The moment I see the resistance broken, I will not trade. Because see, now let the chart settle. Don't rush to enter this trade though. Let the chart settle. So now, I will count my 2 peaks. 1, 2. 2 drop. 1, 2. Okay, let me go back to the. So I come to this place. So Charles theory says when I have 2 peaks, 1, 2, and I have 2 troughs, successfully higher than each other. Okay, it's saying that look, the uptrend has changed to the opposite side. I put the text here, so I have 1. I have my number 1. I have my number 1. Then I have my, okay, let's put this one P1. Let's say this one is P1. That's so this is my P1. That's peak 1. Then I have P2. Then I have T1. That's a trough. That's a lower high now. I have T1. I have T1. Oh, bear with me, you know. I'm always used to marker and board. Don't mind me. You know. So now I've counted my P1, P2, T1, T2. Don't forget Charles theory, Charles Dawes theory, the Dow Jones theory. It says that when the market makes 2 successful peaks and 2 successful troughs higher than each other, then an uptrend has started. So now I'll put my line here. I've seen normally this is not how I used to teach it in class, but this makes you to enter the trade earlier, because in my normal, if I'm attending my physical class, if I attend my physical class, this was my P1, the one that broke that structure. P1, then I'll give you T1, then this one will be T2, then I'll look for T2 somewhere after this one. My T2 will be somewhere around here. Okay, but this makes you to enter trade earlier as long as this T2 is not lower than this T1, then you are good to go. So from here now, uptrend has started. So what do? I just come here, I pick my line, I put my line here. So I'll be telling myself, henceforth, I'll be looking for opportunity to buy. So what do? I go to my lower time frame. My lower time frame, then I start looking for what you can see from here now, lower time frame now. So from here now, so what do? And I will write on my screen. I'll write on my screen up. So in other words now, how do I join up? That means the buy. That means upward. Normally I don't type up. This is what I do. I put up arrow. This is the arrow I put. Or if I'm using trading view is bigger. I'm using trading view to analyze the market. That arrow is bigger. So sorry. So I'm looking for this like this. So what do? I look for what are now my strategies. I'm going to begin to teach you next week. How do I trade trending market? How do I trade an uptrend market? After I've already identified that from this vertical line now, I will only be looking for the opportunity to buy. It's only then and then your trend line now makes sense. Only then and then your moving average now makes sense. Only then and then your candlestick now makes sense. Only then and then you cannot do a lot of other things. See, until you have identified this, don't even draw a trend line. Don't even draw support and resistance. Okay, so here now you can have support and resistance from this place. Insert. You have support and resistance in this place. This too. We are still in 4 hours from there. Okay. In there, you understand? Now we are having support and resistance there. We are having support and resistance there. But this support and resistance must always signal. You are looking for where you know where you are going. You're only looking for where to join. I know I'm going up. I know I want to buy. Okay. I know I want to buy, but I'm looking for where to join the buy. Okay. I'm looking for where to join the buy. So now, if I come to the market, maybe the next morning or the next day, the first place I go to is my daily time frame. Are we still in line? Is the higher high still getting higher? Are we still getting higher high? So, like for example now, so I'll be watching. The moment I see that the last support is broken, like here now. Are you still seeing my board? Are you still seeing? Are you following along? Hope you are not lost. If you are following, say I'm following. If you are following me, say I'm following. Are you following me? I need to know if you are following. Are you following? Okay, if you are following, just say I'm following. Just type I'm following. I'm following. I'm following. I'm following. I'm following. It's the dojo theory I'm trying to establish with you today. The moment I see two peaks and two troughs successfully higher than each other, I mark the moment the second peak is broken. The moment the second peak is broken, I start looking for how to buy. How to buy becomes my interest. I start looking for how to buy. So I put my line there. Every other thing I'm looking for is to buy. But I'll be following that resistance along. I'll be following it along like this. I'll be following along. The moment I see that this thing is broken, okay? So I come again. And insert. I insert a P1. my T1, my P2, and my T2. Okay, if this if it breaks this, if it breaks it, don't forget now if this is appearing to be lower. Okay, I think okay is double bottom. Is double bottom. Okay, we did double bottom. Okay, you're not even still going to buy here. Well, you can still buy here, you can still buy here, but that's not the problem. But the moment I see that this place is broken, when this resistance breaks like this, because I'll be having okay, I think this is my P1 and P2. They are uh, they are double top. Double top is formed here because double top is formed. It means this is what they call market exhaustion that we're looking at in the former slide now. Okay, so I have my P1, I have my T1. Now, don't forget that this did not break this. It's telling me that, okay, maybe the trend was about to change. So I draw my P1, T1, my, this is my P2 now. It's just a double top. And here, will I sell here? I will not sell. I can wait. I can wait, except if I have double bottom, I think I'm going to sell here this double bottom because it's still in line with the general trend. It's still in line. I'll be buying here, but I will not sell here. I will buy at this, but I will not sell it because it has not completed my two, so I keep buying. So, but then it has it has broken this. The moment I see this line broken, I put my vertical line here. After I put my vertical line here, then I come to the lower time frame, and I move to this my line. Where is that my red line? So I come here. Sorry, I come here now, and I begin to look for only opportunity to buy. Opportunity to buy. I have opportunity to buy. I buy double bottom. I'll buy. I even buy trend line. I'll buy trend line. The trend line. I'll buy trend line reversal. I'll buy trend line breakout. Trend line breakout, and like that. A lot of things I'm going to be teaching you now, but the point I'm trying to establish today is that except you've seen a trend reversal, follow the general trend that has been happening. Okay, so this GBP USD. So for example, now this person now, I'm trading on this. I'm checking my trend on daily time frame, but sometimes I do it on 4 hours. I do it on 4 hours. I do it on 4 hours. So like in 4 hours now, listen, I'll be entering this trade earlier. Okay, this is my buy. Will begin from here instead of instead of instead of here. Instead of here. Okay, so I'm selling. This is my last resistance. This is my last resistance. My last resistance is here. Now my resistance is broken. So I count the first time it broke 1, 2. I'll start to buy from here. If this line gets broken, my buy begins from here. I'll be buying from here, up, up. So you can literally come to the market every day and be looking for where to join the buy. Join your buy if you're a day trader like me. Join your buy between certain time of the day to certain time of the day. You're out of the market, blah blah. Don't worry, I'll tell you the specific time you should be entering market and the specific time to be out of the market. Why? Because of what thing I found out recently about forex market. That will make your life very, very, very sweet. Now, the rules I just shared with you now is applicable anywhere. If you're on deriv, it's applicable. If you're trading synthetic indices, it's applicable. You're trading gold, is applicable. You're trading anything, stock. You're trading anything. In fact, I was sharing with somebody last week, and I was saying you can even use that You can even use this knowledge to trade offline. What do I mean offline? What do I mean offline? And, he's one of my big uncles. I think he lost money in the market and he was now afraid. I said, okay, I even use it to trade offline. For example, if you're looking at the gold chart, you're looking at the chart for gold, and then you see that the gold is gold. It has broken the support on daily time frame. Gold has broken support on daily time frame now and has broken it twice. It has broken it twice. Like here now. Okay, let's say gold has broken support here now. See my chart here. Gold has broken this support. Gold has broken this support. One, you broke the support. Two, what do? Just go to the Aboki. Go to the Aboki at Sabo. Go and buy dollars. Go and buy dollar. Use gold to determine it because gold and dollars they have relative. Just go and buy dollar from the market, or you can even buy raw gold. Buy raw gold. The moment you see the support broken the first time, broken the second time, go to the market, go and buy gold. You follow it down, and then now this is a resistance now. There's a resistance here. Because as gold is doing that, okay, let's say you've counted this, you start buying physical gold from here. You buy it, you leave it. You buy it, you leave it. Now, the resistance is not broken, but here, resistance has broken. It has broken here, and then you can decide. You are still buying here. You are still buying from the physical market. You are still buying. Because the price of the gold in the market will be dropping. It will be dropping even physically. Buying gold, dropping physically. So the moment I see the resistance is broken here, I will stop buying. And then the market is increasing. Don't forget that you have bought when you have bought and saved. I mean physical gold. You have bought it and kept it in your house. Anything that has gold, and then you go. Now the price is increasing again. You can choose to hold it. You can choose to now you are holding it. The moment this support is broken now, you sell all the gold that you have bought. You sell it. All the gold that you have bought from here, you sell now because the price is increasing now. You can sell. You sell to this place. Go out to the market, go to the Aboki, sell the gold back. And then you watch it again, it's dropping. If it drop again, you can count P1, T2 twice, you make your money. And that's how to you can even trade physically like that. All this time like this, somebody who has bought physical gold is keeping the gold. The support is not broken. He has not been able to count P1, P2, and then till this place, you are not selling the gold. You are still keeping the gold. The price is increasing. But the day it breaks this, the day the gold breaks this support, then you go to the market, say, I want to sell my gold. You sell it, keep your naira, and watch how the market goes again. It's as simple as that. I know people that trade dollar like this. They just come to the market, use GBP USD or use gold like this to determine the support and resistance, and they literally trade gold physically. But see, that may take you a lot of money to be able to do that kind of business. But it's a profitable business. In fact, those are the people that provide liquidity to what you and I trade and make the markets. Did you understand what we have shared today? The main thing I want to share with you today is what I've shared now, that trend remains direction until a clear reversal has occurred. And for a clear reversal to occur, you must be able to count your two peaks, two troughs successfully higher than each other that gives you an uptrend, or two troughs, two lower high and lower lows successfully lower than each other to tell you that the sell market has started. And whatever new trend you have seen now remains in its effect until there's a clear reversal. That is all I want to do on day one. That if you get what I share with you today, I'm done for this first class. Okay, did you get what I'm saying now? Did you get it now? Do you understand what my main point for today? Did you understand my main point for today? Okay, for example, now look at this chart on my screen on daily time frame. Look at this chart on my screen. Look at this place. This is lower than this, but it's not sustained because I've not seen my T2. I've not seen my T2, so I cannot use it. Okay, so if I say oh, if I say okay, I have my this is my T1. This is the first time it's breaking the structure. The first time it's breaking the structure. I can only think of selling here now. If after this happened, then this happens again. If this happens again, then I start thinking of a sell. I start thinking of a sell from here. From here now, so I will draw my line. I draw my line here now. I start looking for opportunity to sell from here. But it broke, but it could not complete the cycle of P1, P2, and T1, T2. If you did physics in school, you understand what I'm talking about. But that's just Boyle's law, and Boyle's law P1 for pressure. When you have P1, P2 pressure, pressure 1, pressure 2, and temperature 1, temperature 2. It's easy for a science student to understand, but if you do not do science, but this is not really science, we are just using P here does not mean pressure, P means peak, locate, and then trough, the lower part. The moment I can count my 2 on higher time frame like daily time frame, then I know that the trend reversal has started. And as long as that is in effect, I will maintain the trend. Even when you lose money, maintain it. Because when you lose money in that kind of trade, it's because your stop loss is too tight. That's why you lose money. But there's an honorable way to lose. So when you lose money on this now, it's beginning to tell you, okay, all right, no problem. Maybe the trend is about to change, or my stop loss is very tight. Then the moment you identify, so you now wait to see, is the trend changing the direction? Let me wait for the market to be settled. Then when you wait like that, if you see that the reversal has changed, then you change your strategy. Okay, start looking for how to enter in the opposite direction. Are we okay? Are we good to go? So I've been able to establish the main point I want to establish today, to identify when direction of the market has changed. So how to now enter? Where exactly do you enter? Is what we're going to be doing tomorrow. Where do I join the buy? Where do I join the sell if it's buying? Well, you must first of all know, is it buying or is it selling? Or is it a ranging market? Is it buying, is it selling, or is it a ranging market? I want to know, where do I join? Because one thing about making money in the market is that I must know where to enter, where to exit. And 3 things is important in trading financial markets: your entry, your management of the trade when it is going on, and your exit. For example, today now, the signal I took today, I couldn't have come out at that time. But see, I went back to my system and I redraw and I look at, okay, let me draw. Is there any trend line that is coming in opposite direction? I drew the trend line. I said, So instead of me, some pips above, my take profit was above where I closed that thing. I said, there is a trend line here. Come on, let me come out of this market. Then I came out at where at the opposing trend line, I came out of that market, and exactly that was where the market changed direction. And thank God, that's trade management. Some people don't know how to manage trade. Just enter trade and then they go out of the market. And they call themselves day trader. See, a day trader does not go out of the market at any time, except they are broke even. Sometimes when I give you things, I just say, break even now you can walk away from your system. You have no need to lose. But there are times you need to sit down, because you see, daily market has some number of hours of operation. The bank close. Those that produce liquidity in the market, they have a time they close the bank. They close banks. And then see, for example, if you are trading if you are trading anything USD there's a part of the day that you should enter trade. For example, now I trade sometime 1 a.m., 2 a.m. Nigerian time. And what are the currencies I'm going to trade that time? You can't open GBP USD at 1 a.m. You don't have fucking business to do with GBP USD at 1 a.m. Euro USD at 1 a.m. What's your business? Everybody in that part of the world is sleeping. But then Tokyo is on. Japan is on. So I'm going to be trading currency that has to do with Japan, currency that has to do with USD, JPY, AUD, USD, anything AUD, Australian dollar, and New Zealand dollar, or Japanese yen. Those are the things you trade 1 a.m. So 1 a.m. to 3 a.m., those are the things I roll with. I don't open GBP USD on 1 a.m. I said I want to analyze the market down for the following day. Are you hearing me now? Very, very important. So I'm telling you, this trading manager market requires its own skill. It requires, and these skills are not complex. They are just like, because it has to be with the psychology. So psychology requires it takes time to form psychology. See, sometimes it's not really because that your strategy is not good. Though. It's not that your strategy is not good. Though. It's because it takes psychology to make money constantly in the market. Because see, sometimes you lose money. And see, I like when you lose honorably. Okay, my analysis was perfect. Is my A setup. Like now, I have A setup, I have B setup. My A1 setup, and I have A plus setup. Okay, so if I know I feel alright and I lose money, I just laugh because I know the same setup will pay me the money back next time. Okay, I've done justice to my schedule for today. Tomorrow, I want to teach you how to. We'll continue further tomorrow. Period. I'm done for the day. Did you understand what we shared today? If you understand, please say I understand. You just comment, I understand. If you don't understand, you can ask a question in the chat box. You have questions based on what we shared today. Don't ask questions based on what we have not shared today, because definitely we'll reach that later in the future. If you understand what we shared today, please comment in the chat box, I understand. Do you understand what we're sharing today? I want to see your comment. I want to see if you understand. If you understand. Okay. Afiz, Nafiu, thank you. Say I understand. If you understand, please thank you. I understand. So we have a lot to cover, but I want to take it systematically. You may have, I'm even laying a foundation now, because if you don't hire this out, you cannot understand every other thing. For example, like yesterday, I was thinking one of the days I'll come and teach you when trend line is not a trend line. When trend line is not a trend line. Because there are times you withdraw an upward trend line in a downward market. For example, H4 is telling me to sell. I go to 1 hour, I draw a trend line that's telling me to buy. I will not buy. It must conform to my higher time frame. So that trend line is not the trend line. It's the trend line you avoid. So if you understand what we're sharing here, just say I understand. Thank you. Okala Ayola, thank you. Nathaniel Adeleke, thank you. Mr. Claire, thank you. You understand? So I'm going to see you guys tomorrow. I'm not really. I don't really do so much of video recording outside, because see, I make my money in my room. I don't really do so much. But then I think I want to help a lot of people now. I want to actually, like I told you yesterday in the audio, it's not really to. I just want to narrow up what you need to know to be profitable. I just want to narrow it up, because if somebody is left to study on his own and you come on social media, a lot of strategy will attract you. A lot of strategy will attract you here and there. You see, but to be being successful in the market is not by how many strategies that you have, honestly speaking. It's not by how many strategies that you have. It's about how deep you know it. Not necessarily like how wide you know, but how deep you know what you know. So I'm going to be teaching you a lot of things, and I'm going to be recording. That time I'm going to be recording short videos. So just like my staff say, we should, or my team member is the coach, is when I organize these things together. Also, me, my own is just to come here, teach, and go away. So you may subscribe so that he will be editing. So he will be forcing me to produce some videos, some topics. It's going to be giving me some topic to produce videos on, so that when I upload, be able to see it. Okay. Somebody was asking why do I do all those teaching online? I said, well, sometimes to plan to teach online and make my money, let me just rest. But then I think it'd be profitable to share my experience for the past couple of years with you, and if it favors you, then you stick with it. But I know you will make money. Like I know my name. You can't follow what I teach in total and not make money. And what I teach is not complex. Honestly speaking, sincerely speaking, trading is like learning to drive. When you begin to learn, it looks so difficult, like you fall down this car with somersault. But as you master trading, as you master driving, it's not that you're just driving with your palm and then you're still receiving phone call. You're still driving with your palm, you're still receiving phone call. Just the thing looks very, very simple, but at the beginning it's not simple. And that is why you see everybody who has been a successful trader, they will tell you, oh, it took me a number of years to do this, it took me a number of years to do this. But see, some people have quitted before something jump out at them on the chart. Okay. I guarantee you, see, I can never there's no way to lose money in the market, you now blow account. See, and let me tell you some most people that say they blow their account, they didn't really blow account. Forget that. It's a blow account, a blow account. You're trading with $50, you now blow the account. You didn't blow account. You use it to learn, you pay school fees. Okay. Okay, so uh I'm going to be teaching everything you need to know to be successful in the market, risk management, entry, exits. I'm going to teach you a lot of other things, even psychology, even things you could never find in any textbook that the big traders know. But I'll be tailoring towards being a day trader much more than being a trend trader. Okay, being a trend trader. Thank you so much. I'll see you tomorrow, 10 a.m. 10 a.m. I'm going to be at home. I will not be in syllabus. I don't want confusion by what you have not learned. Uh, so I'll see you next class tomorrow. Thank you. God bless.